Welcome to the May issue of Behind the Headlines. Everything you want to know about the Japan energy market in 3 minutes. Jumping right into it, this first headline is interesting. We've only been advocating to put the market together for 7, 8 years now. So they're finally going to put the two of the three together. We're still pushing to have them all put it under Octo. So it's more like a ISO market that you would find in Europe or PJM or et cetera, but it's getting there. So this next one around the oil plants is interesting because the big push just a couple of years ago was get rid of them all, retire them, break them down, get them out of the country. They're finding now that the renewables are not coming in fast enough. So they need those oil plants as a reserve. So the government's now going to pay you to maintain them and keep them sitting there. So in the race to be first in the hydrogen market, Japan got its first ship of a cargo, if you will, of hydrogen from the Saudis. Eventually, a lot of this is going to come out of Australia in the form of ammonia until clean hydrogen is transportable in bulk. So an interesting strategy, there's green bonds, which in Japan have a very, very low interest rate. So Kyushu's method of transitioning its company is to raise capital now under a green bond. But they of course had huge losses last year. We'll see how that plays out. So Toyota, a couple of months ago, we announced Toyota bought out TEPCO's interest in Eurus, which is already a large renewable developer, not just Japan, but they have other locations, Europe, South America, et cetera. But now they bought out SoftBank's renewable. So they think maybe they're number one or maybe number two in Japan now. So it's interesting that the car company is now getting into this in a really big way. Last month, we reported on the 80 million or so fines to Kyushu, Shikoku, Kansai, et cetera. So now the DIET and the METI are pushing to finally truly separate the businesses. I'm not sure how that's going to work, but I think that's going to happen. So the Department of Energy was in Japan making promises. So the thermal in Japan is actually very large. Unfortunately, a lot of that have spas with like hot baths and all that. And that's what's keeping them from mining that for energy. In the continuing push for LNG reform, because if you go back just 5 years ago, most of the long-term contracts had what's known as a destination clause. So in other words, if we'll pick on Tokyo Gas, just to pick somebody, they had to have delivery in Tokyo Harbor, period, and stop. That was the destination clause. So if they didn't need it, it went back to the trading company. So they're getting rid of those eventually, and now they've got long-term ones down considerably. In October, there's sort of this loosely defined trading week where the brokers, the futures markets all hold some educational stuff, but mostly cocktail parties. So it's happening again first week of June. I'll be there. If you're inclined, let me know. Happy to get you some invites. If you're going to be there already, let me know. Maybe we'll get together. If not, over a drink, maybe separately. So this last side is interesting because the spot market has dropped primarily because of spring, primarily because LNG prices are down. But all of a sudden, there's significant margins for retailers. And after having been clobbered for 2 years and driving a good third of them out of the business, the margins are back. How long they last, we'll see. But for now, it looks healthy this month anyway. Well, thanks for watching. Sayonara.